So indirect labors are those labors which are not directly engaged in converting raw materials into finished goods, which are not directly engaged in converting the raw materials into finished goods, like supervisors, superintendents in a factory, foremen, general helpers, and all those who are engaged in maintenance work in a factory. They are definitely being paid by the company, by the manufacturing company, but they are not directly involved in the manufacturing process. They are indirectly involved. Therefore, they are called as indirect laborers. The watchman, the sweeper, the janitors, the superintendents, or the office or administration staff, the foreman, general, all those people, all those laborers who are engaged in the maintenance of machineries or plants, all these are indirect laborers because they are not directly connected with the manufacturing process. So you see, the payroll means the amount of money which is applicable, which is payable to the laborers. It is a liability. The amount of money which is payable to the employees will be treated as a liability. We are going to record on the credit side. According to rules of debit and credit, liabilities increase will be recorded on the credit side. Liabilities decrease will be recorded on the debit side. In this case, for instance, in this instantaneously, the liability increases. All these laborers are engaged. The amount of money which is payable to the laborers will be recorded on the credit side. You see the flow of this payroll from the credit side to the debit side of the work in process. The journal entry would be work in process debit and accrued payroll credit. Accrued payroll means liability. Outstanding payroll or accrued payroll. Accrued or outstanding means due but not paid. It is a liability. Whatever the amount which has been decided to pay to the laborers will be recorded on the credit side. It is an applicable amount. It increases liability. And liability, whenever it increases, goes to credit. It will be recorded on the credit side. But it has to be shifted from the credit side of the payroll to the debit side of work in process. You see how this cost flows from the credit side of the payroll to the work in process, the debit side of the work in process. Now, moving over to the next ingredient, factory overhead control. Factory overhead control means all expenses, all costs which have been incurred in the premises of the factory during production will be treated as factory overhead control. Heat, lights, power, gas, all utilities will be included in the factory overhead control. The depreciation of equipments in a factory during production, the depreciation of machineries, the factory rent, the factory taxes, the factory insurance, all will be included in factory overhead control. In short, except direct material and direct labor, all expenses will be included in the factory overhead control, which have been incurred during the production. Means other than direct material and direct labor, all expenses will have to include in the factory overhead control. It is a gain of two types: applied factory overhead and actual factory overhead. Factory overhead control, we will use factory overhead control. One is applied factory overhead, you see, other is actual factory overhead. Applied factory overhead means estimated amount of money, estimated amount of cost of factory operations during production. You can understand with the help of a simple example. If you're gonna shop to the market for a shopping, you put some amount of money, let's say 10,000 of rupees, into your pocket. You never know what actual amount of money would be spent for your shopping. But you put, let's say 10,000 of rupees into your pocket. It is an estimated amount. It is an applied amount. It is an approximate amount. It is an anticipated amount. It is a forecasting amount. But after having done shopping, on the return, when you go back home, you come to know what amount of money has been spent on the shopping. Let's suppose 8,000 of rupees. You check your pocket and you see that you are having only 2,000 rupees out of 10,000 rupees. It means that you have been spent 8,000 rupees on your shopping. This is your actual amount of shopping. You never knew when you start going to the shopping. Likewise, when a manufacturing company starts, it forecasts, it predicts, it procrastinates the amount of money which will have to be spent on the manufacturing process, which is called as applied factory overhead. On the credit side, the journal entry would be work in process debit and applied factory overhead credit. You see the flow of applied factory overhead on the credit side is flowing to the debit side of work in process. First, direct material goes on the debit side, then direct labor goes on the debit side of work in process, and then lastly, factory overhead control or applied factory overhead goes the debit side of the work in process. This is how a manufacturing cost flows. Now, work in process. Work in process is partially completed goods, not completed. Partially, not fully completed. Partially completed goods upon which production activities have been started but not yet been completed. Until finished goods, until the manufacturing of the good, all this amount will be recorded on the debit side. But after having completed the production, after having manufactured the product, it will be credited. The amount of this amount, how much amount of goods have been finished or manufactured, will be recorded on the credit side. Work in process is again an asset. The nature of work in process is again, I stated earlier that there are three main inventories of a manufacturing concern or a manufacturing company. For the materials, work in process, and finished goods. These are current assets. They are recorded in the balance under the head of current assets. Work in process, when these amounts flowed from to the debit side of the work in process, it will be recorded because the in this case the assets which is named as work in process has been increased. An asset increases goes to credit, goes to debit, as per rules of debit and credit. And when asset decreases goes to credit. Therefore, the amount of this amount, how much amount of goods or products have been manufactured or have been completed, they are going to record on the credit side, because asset decreases goes to credit as per rules of debit and credit. You see the incoming of costs, three costs: direct material costs, direct labor costs, applied factorial costs, and the flow on the credit side, the work in process, the cost of the goods manufactured flows on the debit side of the finished goods account. The debit of the finished goods account, the journal entry would be the cost of goods. The journal entry for the cost of goods manufactured would be finished goods debit and work in process credit. Until the goods have been manufactured, it will be the entry would be work in process debit. As I have stated earlier, work in the journal entry for the materials, work in process debit, material credit. Work in process debit, accrued payroll credit. Work in process debit, applied factorial credit. But as soon as goods have been manufactured or completed, it has been recorded on the credit side. The journal entry would be finished goods debit, and work in process credit. Work in process credit is the credit side of work in process. So the journal entry of manufactured goods would be finished goods debit and work in process credit. You see this flow of cost? The cost of finished goods manufactured flows from the credit side of finished work in process to the debit side of finished goods. Now these completed product or finished products have been shifted from the company, from the factory, to the finished goods storeroom. Finished goods storeroom is a warehouse where finished goods are being transferred, are being shifted from the factory, from the work in process. Work in process means factory. Three main locations: raw material storerooms. Whenever the raw material has been purchased, it is from the supplier. It is directly in a storeroom, put in a storeroom. Then, as per necessity, as per need of the production, then to the work in process or to the factory, and then from the factory to the finished goods storeroom. These are three main locations. Now, finished goods storerooms, the product are in a ready to sell condition to the customer. The debit side of finished good means that this amount of money, this amount of finished goods are lying, are present, are available for sale to the customers. And whenever we are going to sell to the customer, we are going to record on the credit side of the finished goods. The journal entry for the sale of finished goods would be cost of goods sold debit and finished goods credit. The cost of goods sold debit, you see the cost of goods sold flows through the arrow on the debit side, the cost of goods sold account, cost of goods sold debit, the journal entry For the sale of the journal entry, for the sale of would be cost of goods sold debit and finished goods credit. The debit of cost of goods sold is an expense. Cost is an expense. Cost of goods sold is an expense. Until this merchandise has been sold to the customer, it was treated as an asset. But as it has been sold to the customer, it has been converted into expense. The crediting the finished goods means the merchandise has gone. Finished goods is an asset. Asset increases goes to credit. The debit side of finished goods means the increase in the asset account. The credit side of finished goods means the decrease in an asset account. This credit side of finished goods are being shifted, are being transferred in the name of expense, in the name of cost of goods sold on the debit side. You see how the expenses flows from raw materials to work in process, then labors to work in process, then applied factor to the work in process, then work in process to the finished goods, then finished goods to the cost of goods sold. This is the flow of cost. This is the flow of cost. This is the actual essence of a cost accounting. Understanding this process means you have a complete command over the subject of cost accounting. It is the main essence, main phenomena. The cost accounting is all about this process. Now, in the next lecture, we're gonna take amounts have been purchased, how much amount of raw material has been utilized, how much amount of money have to pay to the laborers, how much amount of money has been paid, how much amount of money has been applied for the factory overhead, how much amount of money have been incurred as an actual, what would be the total manufacturing cost, of which how many amount of finished goods have been manufactured, of which how many finished goods of amount have been sold to the customers. In the next lecture, we will continue this example, we will continue this process through amounts, through a problem, so that you could understand completely. So that's enough for now. Until next time, take care. Bye bye. See ya. Pakistan Zindabad.